Okay, so this is the chapter that we are going to start with, and that's related to delivery. And it's exactly equal to chapter 9 of your reference book. So in this chapter, we started with definition of logistics. This is a very nice definition, the management of inventory in motion and at rest. So it's clear that what do we mean by in motion, which means transportation, and at rest, which is the traditional inventory management. Okay, and a detailed definition of logistics. And here we divided the cost into three parts. This is very important. And we discussed that the transportation parts is um, the most contributing cost or the greatest cost in this category. Here we discussed about why the percentages of uh, logistics in US GDP is decreasing, because if something is decreasing, it shows that it's going to be removed very soon and it doesn't show any importance. However, we proved in this slide that no, it's not correct. There are some reasons that it's decreasing. So please read this slide and watch the video of that carefully. And then here we discussed about the percentage of transportation out of the entire logistics, business logistics cost. And we discussed that it really depends on the nature of business. Sometimes it's only 1%. So if it is not bulky and it's very, um, weight is also very low. So in this case, the transportation cost will reduce. And if it's on totally opposite side, which is very bulky and also not very heavy, so in this case, the cost will be even more. Okay, and we started reviewing different transportation modes. These are the traditional ones. We focused mostly on these five, and we also highlight what is the trend right now. So the trend in transportation is integrating multiple modes, which we call it intermodality, and also linking modes into supply chain activities, such as production and distribution. So something could happen in the middle. Okay, any questions? No. So you can always stop me whenever you have a question. Transportation carriers, here we discussed that what is the difference between a carrier and a shipper. Yeah, and always remember the example of um, Amazon when you buy a book. So the company that is selling the item and the company that is moving. So Amazon will be the shipper because they requested the movement, and let's say FedEx or UPS are carriers because they are moving the items. And a detailed discussion about how to select the mode of transportation. And here we refer that there are three main criteria when we decide about selection mode, including cost, reliability of that selection mode, the reliability of that um, mode of transportation, and finally the speed. And if time really matters for us, we should go for most costly one. If not, we normally prefer the cheapest one. So the one which doesn't provide us so much cost and everything will be delivered on time. So these are the things that we prefer. Then we reviewed individual uh, transportation modes, including rail. So what are the benefits, advantages, and disadvantages of rail? Um, and also which types of products are normally moved by rail. Then we moved to truck. So truck was the most competitive one because there are lots of companies in this section. So as a result of that, some benefits are brought to this mode of transportation. And here it's very important, the difference between truckload and less than truckload. This is very important. Please learn it deeply, that which one is preferred in which situation, and in general, which one is preferred. So truckload is preferred when we have enough things to move, and less than truckload is preferred when we don't have enough products, but we need to move it as soon as possible. The primary advantages of them are also discussed here. Then we move to air mode. Air mode is clear for which type of products is appropriate. So these are the characteristics of air transportation. Then we move to water mode. So which products are appropriate for water mode and advantages of uh, water transportation, and also pipeline. So for the pipeline, what are the types of products that you may move with this um, mode of transportation? And this is the most important slide here. Okay, so please review this slide carefully, because I may ask so many questions from this slide. Because here we are going to discuss about the characteristics of transportation mode. And these are divided by economic characteristics as well as service characteristics. So service characteristics means the speed, availability, flexibility, and cost and damage. And economic one are referring to the cost, market coverage, and other characteristics. And mode and carrier selection criteria. This slide is also very important. So what are the criteria to select a mode of transportation and the carrier? Then we discuss about third-party logistic providers or suppliers, and what is good about them, what they do, which types of services they provide. And this is also important slide. The benefits or potential advantages of 3PLs is discussed here, is important, and factors contributing to expansion of third-party logistic providers is also very important. Okay. Effect of transportation deregulation. So after governments decided to release their control over transportation and give it away to freedom of transportation and freedom of business. So there are lots of benefit brought to that. So this is also interesting slide. Elements of transportation and logistics strategy. When you're talking a strategy about a strategy, it's something in high level, and you know that each strategy should be compatible with organization strategy. Okay, so one of them is transportation and logistics strategy. So how can you make sure that this strategy is compatible with organization's strategy? So please read this slide, because it's going to show you how to link them. Okay, so that was all related to chapter 9 of your reference book, which is equal to session 13 of this course. Okay, now let's move to next topic. Am I going with good speed, or you have more questions? Okay. And then on chapter 14 of your course, we had a numerical chapter, which in this chapter we reviewed some concepts. So I don't want to review those concepts at the moment. I want mostly focus on sample questions. So please make sure that you have reviewed these questions. There is a video already uploaded uh, for this topic. So please watch it, because this video was used in previous semesters in order to solve these questions and discuss that how should you solve these types of problems. 3 questions will be asked from this topic, so make sure that you already know that. So we briefly review one of these questions because your final exam, 3 numerical questions which have a great amount of marks. So make sure that um, you have practice for this topic and you're ready for that. So a typical question could look like this. Using the following data in the table, answer the questions. What is the cash flow considering 10% cash, 10% tax? And you can use either graph or table or summarize your answers. So uh, you're free to use any method. So in this case, we have 2 projects, project A and project B, and each of them have, you know, uh, 5 years to operate. So C0, which is the first day of the project, C1, which is the end of year 1, up to the end of year 5. So we have some investment, we have some incomes equally divided each year, and then you have some maintenance. Be careful because in final exam here, for example, I may give you 5,000. So they are not always equal. Maintenance, which is the cost of making sure the machines are working well. So you need to repair them or check them. And salvage value, which means that the machinery at the end will have some values. You can sell them in the market and get some portion of your money back. And this is correct for the second machine as well. So we are comparing that if we want to buy 2 equipment or 2 machines, which one is more economic and bring us more value. Okay, so again, you may use table method or you can use graphical method. So if you use graphical method for the first project, it will be like this. So because the first investment in the first day of project, which is $10,000, is negative or something going out of your pocket, so it's going to show an arrow towards down. And anything that is coming to your pocket and giving you some advantage, so it's going to go uh, it will be shown by an arrow towards up. So equal $3,000 each month, each year will be added. And also you should deduct some maintenance costs. Yeah, this maintenance cost is already given here. So how much is that? 300. So 300 per year you should cost on uh, maintenance. And also after you sell the machine at the end of year 5, you will get some money back because we have 2 money coming to our pocket. One of them is the income from manufacturing and the other one is selling the machine and the salvage value of that. So we have 2 arrows here. You can summarize it again. So how to summarize? In year 1, you should go year by year. In year 1, there is no any other cost, so it will be only $10,000. Okay, so it will be shown by an arrow towards down. Then in year number 2, at the end of year number 1, which is here, you have $3,000 income. You should deduct $300 because of maintenance. So it will be 2,430. And this is correct up to year number 4. Correct. But in year number 5, we have 2 sources of income. One of them is the salvage value of machine, and the other one is the cost of selling machine, the income of production. So as a result of that, it will be 2,430 plus the income coming from uh, selling the machine. But be careful. Here we also have another thing. Let's review what else we need to consider. It says that what is the cash flow considering 10% cash? Okay, so it means that I have to consider the effect of tax as well. So when you have tax, it means that you have to deduct 10% out of that. So 10% will be deducted from the income. But you also should be careful about the case here. So in previous example, I have explained in detail that when you have tax, which items are taxable, which items are not taxable. So review that video as well. Okay, so let's say we have summarized everything like this. The same thing for the second project. Now we have a question here. Second part of question. What is the payback period for this project? Okay, so this was the first method of economic evaluation we reviewed, and it should be very easy to answer if we already know the cash flow. So how should I answer this part for the cash flow? So I should check if I can find $10,000 in the income of next year's, and I have to see in how many years I can wrap up or find $10,000 that I have already spent. Okay, so it will be 2,430 for year 1, 2, 3, and 4. And please make sure that you are muted. Thank you. I appreciate that. Thank you. So as you can see, I need the income of the first 4 years and a portion of fifth year. So it will be 4 year and something. The same for project B. So it will be 4 years income of project B and a little bit of project B. They are almost the same, but because project B has a little bit less uh, years to return the investment, so in this case, I may go with project B. And the next thing that we need to consider is if the opportunity cost of capital is 10%, okay, or I is 10%, which project is the best using NPV method? Okay, so NPV method is a little bit complicated, but still we can do it with no problem. So this is the formula for NPV, income of each year, divided by 1 plus opportunity cost, which is 10%. In this case will be 0.1, power to year of operating. So this is the income of the first year. That's why I write 1 here. The income of the second year. That's why I write 2. Up to the last year. This is the income of the third year. That's why I write 5. And all of them should be deducted from uh, the initial investment. So after you solve it, you will see that the cost will be 232 negative. So what's your idea about this project? Any answer from the class? So the NPV of this project is negative. What should we do? Can you hear me?
Yes, sir.
Okay, so when NPV is negative, what should we do? Is this project profitable? No, sir.
No, sir.
No, it's not
It's
profitable.
negative,
Okay.
sir. No.
Yeah, so we shouldn't go ahead with this one. And when if we calculate the same thing for the second project, we'll see that it will be a positive number. So which one do you prefer in this case?
Project B.
Positive.
Yes, project B, because it's a positive number. And again, please do practice. I have provided you solution as well, but please first solve it by yourself and then check it here to see if you can solve the problem correctly. Part D, if
Sir, this kind of question can I expect in final exam, sir?
exactly. That's
Yeah,
what I
please.
mentioned. 3
Thank you.
questions. Yeah.
Thank you, sir.
Sir, do
And
we have a questions from EOQ, reorder point, or inventory management in
no,
agriculture?
no,
Thank,
they will not
thank
be
you.
there. But the other conceptual parts from chapter 1 will be in the exam, okay? So the only thing that
Okay.
is not included is the numerical questions from midterm. Otherwise, the rest of items from day first of this course will be in your final exam.
Thank you so
Okay,
much, sir.
you're welcome. So part D is asking about profitability index and which project is the best. And again, please, please do solve it by yourself. Solve more examples because otherwise in the exam you won't be able to pass. And a great portion of final exam mark is related to numericals. So for project A, I need to consider the economic value after the time value of each, uh, the time value of each income at the end of each year. So at the end of year 1, this is the value of my income at the end of year 2, year 3, year 4, and year 5, divided by initial investment. So profitability index will be 0.97, and the profitability index of project B, something similar, the value will be 1.08. So which project will be selected? The project with higher profitability index, okay? And in this case, because our income is more than our investment, so it will be a number above 1, okay? So this is the way that we select. An average rate of return is another way that we calculate the profitability of this project. And here we need to calculate the average of income in 5 years divided by initial investment. So again, you will see that project B has a better situation. So project B has a better average rate of return. So that's why we go with project B. What is the main difference between profitability index and average rate of return? Who remembers? Okay, it looks that you have not started to review the course, and that's a little bit unfortunately. So profitability index considers the time value of money, but average rate of return does not consider the time value of money. Okay, so be careful about that in final exam. You may face difficulties if you don't know these topics. Okay, so let's go back to the review of course. And this time I'm going to review the next chapter, which is chapter 15. So we started with chapter 13 and chapter 14. Now we want to move to chapter 15, which is discussing about price. Okay. So another important topic that we covered in this course was the importance of price. And this is one of the criteria in order to decide if we should go with the supplier or not. This is a traditional one. And here we discuss about the importance of fair price, and we learned why having a fair price is important, not only for suppliers, because whenever we think about price, we think only the payment to suppliers or to sell to um, providers. But in this case, we are not talking about that. We are also talking about the importance of a fair price to buyer. Okay, buyer will also benefit from a fair price in long term. Okay, and we showed you why it is important. And there are 3 reasons for that. Please review that as well. we divided costs in two categories of direct costs and indirect costs. Direct costs are those costs that you can see in final products, so we are also call them variable costs. So by increasing 1 unit of production, direct cost will also go higher. Indirect cost, you don't see a direct sign of that in final product. So by increasing 1 unit of production, so indirect cost does not necessarily increase, okay? So you cannot find a direct relationship between 1 unit of increase your production and indirect cost. We also call them overhead costs. So that's why we divided the cost also in 3 categories, which are variable costs, fixed cost, and semi-variable cost. The first 2 categories are clear. The last one is talking about those products that we are not sure if we should put them under variable or fixed cost because their nature is something in between. For example, the lighting and heating and cooling of a factory. So in this case, if that heating and cooling is used for production people, that's something that can considered as variable cost. If that is used for, let's say, accounting or other administrative department, that is considered as a fixed cost. Here we reviewed the nature and the method of calculating the cost and price, both of them. And we learned that there are 2 ways to calculate the price. Number 1 is the cost approach, which is exactly shown here. So you calculate the total cost and add a little bit of profit, then it will be your price. But in the market approach, you will not decide about your profit and your cost. The market is going to determine how much should be your cost. Okay, if the supply is more than demand, make sure you're muted. Thank you. Please make sure you're muted. Thank you. Okay, so if the supply is more than demand, okay, so in this case, there's a high chance that the price be very low. And if the demand is higher than supply, so in this case, there is a high chance that the price goes higher, okay? Even higher than your expected profit. So it will go very, very profitable situation. Okay, and here we discussed about 7 types of purchases and what is the best way to find the right price for them. So we discussed about raw materials and semi-processed materials. Then we discussed about the parts, maintenance, MRO, and small value purchases. So I can design many questions out of these topics, 7 types of purchases. Please watch the videos carefully. And also this slide, this is the continuation of the previous one. So please read these slides very, very carefully. Requirements for competitive bidding. This is also something that we didn't discuss in detail, but at least I may design one question from this slide. Conditions for a successful competitive bidding. This is also something you need to know. 4 methods of pricing options. Definitely, I will ask a few questions from this topic. So how can we make sure that in our contract with suppliers, we reflect how to compensate the cost if the costs go higher or lower. So that's something that we need to know about that, different types of contracts. Okay, then we discussed about forward buying. So it is good for which types of products, and so it's mostly good for commodities. And what are the characteristics of forward buying? What's the value of that for our company? So it can help us to buy the products ahead in order to manage the shortages, the strikes, and price increases. And there are also the value, purposes, and benefits of that to our company. And what does hedging mean? Hedging means to buy something in future and also selling it at the same time. So in this case, we won't lose anything. We are just guaranteeing that we will have it in future. Okay, that's all from this chapter as well. And then we move to next chapter. It should be chapter 16, which is talking about the cost management. Please stop me if you have any questions in the middle. So in this chapter, we're talking about cost management, and here we talked about strategic cost management and what does it mean and what are the um, process of that, what are the steps of that. And here again, we reviewed the method that we classify the cost in terms of direct and indirect cost, and we discussed why it is important to consider direct and indirect cost. The same for variable, fixed, and semi-variable cost, why it is important. And then here we learned that ABC classification, which is discussed in inventory management, as well as Pareto analysis. So why these tools are important? Because they will help us to identify what are strategic items, which are A-class items, and we need to spend most of our time on these items. So these are the types of items that, that the types of actions we need to take if we have A-class items. So this slide is also very important. Then here we continued about other types of A-class items. So they could be products or services that are customized or their cost is low, but we use them a lot. So as a result, cost multiply units needed, it will be a huge number. And the opportunities that you can reduce the cost in this category is also discussed. We end up to learn about portfolio analysis when we discuss about the value versus risk. So as a result of low value, high value, and low risk to find the items or supply the items, and high risk to supply the items, we have 4 different categories on this matrix. If you remember, we also called it chiralgic matrix. So over there we have strategic items. These are very critical. Um, their value is very high and their risk is also very high. Then we have bottlenecks. Their value is not very high. They're medium to low, but the risk of them is very high. The easiest area is here. Their value is very high and the risk is very low. And finally, non-critical items that their value and risk, both of them is low. Okay, so based on each of them, based on the fact that your product will be strategic, bottleneck, leverage, or non-critical, so you will take different strategies to manage the cost. Okay, so if the product is in this category, what is the important issue? There are lots of suppliers. You don't have any issue. So you should just think about how to reduce the acquisition cost and total cost of ownership. Okay, so you may go with methods such as e-commerce or online selling to reduce the cost. If your products is in this category, which you have difficulties to supply them, so you should start establishing good relationship with your suppliers and a kind of long-term relationship with them. Okay, And here we talked about early supplier involvement. This is a good way to reduce the costs. And also we discussed about the importance of total cost of ownership or TCO. And challenges of that, applications of that. There's so many questions could be designed here. This slide is absolutely important. So what are different categories of total cost of ownership? I may, for example, bring you one of them. For example, any of them. Inspection, for example. And I ask you, is inspection under pre-transaction, transaction, or post-transaction? So you should know all of this cost carefully. Then we had target costing, why it's useful, how it is used. And then we move to learning curves. What is the application of learning curves? When it is used? What are the benefits of that? I don't want you to know the details of this method. All I want you is to know what's the application of that. And value engineering, we didn't discuss much in the class. Activity-based costing. This is also a very interesting topic, and why activity-based costing is important, why we like it. Okay, so the reason behind that is we can link the production cost, increase in production cost, to the entire one, and also how we relate the overhead cost into variable cost. Okay, we discussed detail about fintech and what's the value of fintech companies, how can they help companies, are they good for large companies or the small and medium sized companies, and how do they work. So this is also a very interesting topic. Then we move to negotiation. As you remember, this is the most difficult method, the most sophisticated method in order to determine the price and also buying something. And it needs a kind of understanding. If you and buyer, you as a buyer and sellers got to a understanding that what are the situation of both sides, you have reached to the goal of negotiation. And negotiation is not just on price, it's on quality, support, price, transportation, and supply. So it will be on 5 different topics. Many people think that it's just on price, while it's not. Okay. And then the mechanism of that and how to find the zone of negotiation. I think that's all for this chapter. And then we move to chapter 17, I guess. Chapter 17, which is supplier selection. It was also very interesting topic. Let me find it. Okay. It looks that I unfortunately closed the chapter. So let me bring the chapter again. Okay, chapter 17, supplier selection. And then, yeah, this one. I'm gonna share it again with you. Okay. So is it visible now?
Yes, sir.
Okay. So when it comes to supplier selection, I told you that this topic and the topic of next session are very important, which is supplier evaluation. And this is something that everybody should know, especially in your field. And we referred here that it can be considered as a decision-making problem, how to select a supplier. So in this case, it could be either decision-making under uncertainty or probability or risk. So if the probabilities are given, it will be risk. If the probabilities are not given, it will be uncertainty. And here was the entire topic in one slide that what we are going to do. I don't want to repeat it again. And this is a very useful slide in order to summarize how should you select suppliers. The sources of finding information about suppliers, this is very important. And then 3 different methods in order to ask information from suppliers. The first one, request for information, brings you no responsibility. But if you go further, when you reach to RFQ, RFP, and RFP, you are showing some signs that you are interested in the products. And you should also know what's the difference between RFP and the previous 2 ones, which are RFB and RFQ. And also we had a list of questions related to should we go with a single source of supply or multiple sources of supply. These slides are absolutely important, okay? So please read these slides carefully. So in which cases a single sourcing is important and in which cases multiple sourcing is required, and we should go with multiple sourcing. So again, these 2 slides are important. Then we get to should we buy from a manufacturer, directly from manufacturer, or we should buy from some intermediate stages such as distributors or wholesalers. And here we discussed that when you should go with wholesalers or distributors, when you should go with manufacturers. And it's very clear. So this slide is very important. Where should the supplier be located? Should we go onshore or we should go offshore? And we discussed what's the difference between them. Traditionally, onshore was preferred, but right now, because of the um, so many evolutions in transportation and also in information technology, so we don't need to just rely on onshores. There is a trend right now which is called reshoring as well, so study that as well. Should we buy from a large suppliers or a small scale suppliers? This is also absolutely important. So the characteristics of the small suppliers, the characteristics of large suppliers. So which one is the best fit for us? Okay, 3 levels of supplier evaluation. This slide and understanding that what does it mean is very important. So the first level of evaluating suppliers is a strategic level. So we need to make sure that there is a link between um, supply strategy and organization strategy, supply and organization. If there is a link, so you can evaluate and achieve the goal of your company. If there is no link, so whatever you are doing in supply and procurement department is not something that organization wants, that the company wants. So you may end up selecting wrong suppliers. Level 2, we have 5 traditional criteria, which are quality, quantity, delivery, price, and the services. So you need to make sure that these 5 criteria is considered when you are buying from a supplier. And level 3, which is current additional one. So these are recently very important for companies to consider, such as financial status of the company, sustainability, innovation of that company, respecting the regulation and laws, and also contribution to the political parties. Okay, when we call something a strategic sourcing, when your supply strategy is linked with your organizational strategy. Okay, this is very important. Risk should also be considered when you're purchasing. That's why, again, we have something which we call it chiralgic metrics. In chiralgic metrics, we divide the types of purchases into 4 categories: strategic, bottleneck, leverage, and non-critical. This is exactly what we had before. There is no change. But the interesting part is that what is the characteristics of the items under strategic items? What is the characteristics of items under bottleneck? So please make sure that you learn them properly. Okay, here we don't have something important. The weighted method we also have in supplier evaluation. And I think that's all. And then we need to move to chapter 18. Supplier evaluation and supplier selection. Again, another important chapter. So the ways that we evaluate suppliers, including informal, so in which cases we use informal, what does semi-formal mean and when we use it, and finally formal way of evaluating and ranking suppliers. So this, the last one, which is called formal evaluation, can be divided into 2 groups: categorical evaluation or weighted methods. What does categorical mean? We brought one example here. What does weighted method mean? So it's also discussed here. And why it is important that we consider these 3 criteria, these 3 groups of criteria in evaluating suppliers, because they matter for customers. And after we evaluate the satisfaction of customers and not customers here actually, the satisfaction of buyers and suppliers, and we evaluate the values, you will see that we will get up to 4 different categories. And we discussed that it could be either none of them are happy from each other, both of them are happy from each other. Then we have some cases in middle. So one of them is only happy from each other. So and we brought some examples in the class. So watch the YouTube file of that carefully. And okay, the next 3 slides are absolutely important because they're going to talk about how can each of them, which are buyers and suppliers, create a negative signal to each other so that they can destroy the satisfaction from each other. So this slide is very important. And then how can they show some positive signals? So in this case, they can improve the relationship with each other, because the goal is that both buyers and suppliers enjoy the work at the end. So how can they positively impact their relationship? So that's also important. And how suppliers can bring some positive signals to their relationship with buyers as well. So please make sure that you read this slide carefully as well. Okay, this is a kind of a spectrum showing the relationship between buyers and suppliers. So definitely this is the most negative one. We don't want to reach here. None of them are happy from each other. Here it may just buy one time. Here you may continue buying, but only for one product. Here you're happy from the relationship, and both you and suppliers are doing great. And finally, the best zone or the best area is here, which we call exceptional suppliers. So these are the suppliers that you can consider only one of them. You don't need multiple of them, okay? And you can start building alliances or strategic relationship with them. And you have different types of partnership or alliances. It could be operational or a strategic. A strategic one is also could end up to alliances. Operational ones are good for leverage items, if you remember. And these are just focusing on the cost of acquisition. So how can we improve the cost of acquisition? For example, we can end up having a mutual agreement on using a website or e-commerce method, or making sure that we are buying the items at the right price. A strategic partnership is much higher than that. You're trying to consider the company as a part of yours. Okay, so you will do so many things for the benefits of your long-term relationship. This slide is absolutely important, which is it's trying to compare the traditional relationship between buyers and suppliers and the new one, which is the partnership or alliances. So what are the values, how it is changed over the time? So you used to just consider the lowest price. Now you consider the lowest total cost of ownership. Okay, so not only the purchasing price, but also the other prices as well, and other detailed things as well. Um, what is the impact of some strategies that you make on your relationship with suppliers, and what is the benefits for both of you? Okay, this slide is absolutely important, so please make sure that you know that what are the nice strategies. So in the final exam, I might say that, okay, which of these strategies are useful for the for establishing a good relationship with your partners or with your suppliers? So instead of decreasing average delivery lot size, I may say increasing. And if you don't understand that, you may select that. So be careful about that you totally understand what do I mean. I have brought some examples as well. Make sure that you watch the videos. Okay, another nice slide which summarizes many things. So what is the benefit of having a good relationship or successful partnership between buyers and suppliers? So what are the benefits if I say single supplier, strategic, long-term? So what is the benefit of them? This slide is going to summarize all of them. So after reading this slide, you may understand why many companies believe that we should go with single suppliers. And also in which cases having a strategic relationship with suppliers is not useful. So this is called the dark side of buyers suppliers relationship. In the cases that suppliers may show some opportunistic behavior, so we should be very careful about that. And how can we take care of that so that it doesn't happen? Okay, that's all about this chapter as well. I think only one more chapter is left. Chapter 19. Okay, so let me wait. So other supply responsibilities. Here we are talking about 6 different responsibilities that could be also assigned to procurement and supply department: receiving items, logistics and warehousing, inbound and outbound transportation, production planning. As you remember, this was the most weird one, but it is in many cases a part of supply department, accounts payable, and investment recovery. There is a list of questions at the end of each chapter. They give you some nice hints that what are the important topics there. Receiving, uh, the role of receiving, the importance of receiving, and how can we, why it is a good idea that we have receiving under supply department. The important documents, we don't care about that much. Then we move to logistic and warehousing, and different ways that logistic and warehousing could be managed in a company. It could be either managed by themselves, or they may hire a third-party logistic provider. And what is the trend there? key logistic decisions. This is very important. And then we have inbound and outbound transportations. What is important? What are the list of activities that we can do? What are the opportunities to cost reduction here? If you merge inbound and outbound transportation, so you can save some costs. That's also important. Production planning, why we can say production planning can be done by procurement department. So in each of these 6 categories, be careful. There is a fixed question. Why you believe it should be done by supply and procurement department, or in other words, why you believe that this is a responsibility of suppliers or supply department? And also you need to consider the benefit of that and the opportunities that it can bring. Okay, I can get you one question from this slide, accounts payable. So what are the problems of that and what are the benefits of that? Investment recovery. This is a new idea that we should give the opportunity of investment recovery to supply department. Why? Because they know the market very well. They know this, the suppliers, negotiation, the situation, all of them they know better. So that's why we believe that we should give this opportunity to supply department. And these are the benefits listed here. Okay, opportunity in investment recovery. This is also a very important slide. What does closed loop supply chain mean and how can we use it in order to manage the investment recovery? Okay, this is also the continue of that. Categories of material disposal, not that much important. Reasons for assigning disposal to supply department. Yes, this is absolutely important slide. And in general situation, do you prefer reduce or recycle? Definitely reduce because it has less risk, less complexity, easier to implement, and a smaller environment and larger environmental benefit compared to recycle. And then we understand that what does recycle mean, what does remanufacturing and reuse mean, and these are all the reverse flow, and this is the forward flow. Most of our supply chains only implement the forward flow. If we could attach the reverse flow as well to our supply chains, then we will get to closed loop supply chains, and that's the goal of closed loop supply chain. Okay, and here's a list of questions. Again, we answered them in the class. Just review them again. Okay, so I think that's all for today. Again, your exam will be on December 20. So a link will appear in your Moodle page, of course. Your exam is comprehensive, so all chapters of this book will be used. This is a closed book, closed note exam. Please consider academic integrity. I'm going to trust you. So I'm not going to keep you stressed by turning your, camera on or adding an app to your web page so that you cannot, change your browser or something like that. So please respect that. I am trying my best to make sure that you deliver a nice course and nice material. You should also respect this by considering and respecting academic integrity. And yeah, other topics that I should let you know, there will be 28 conceptual or theoretical questions from all chapters from day first of this course. There will be 3 numerical chapters. All of them will be from equipment acquisition and economic analysis. So in total, 31 questions to be answered in 75 minutes, starting from 9 a.m. and finish at 10:15. So that's more than enough. And all of them are multiple choice questions. If you skip a question, you cannot go back. And please bring your calculator and one page of formula related to economic evaluation. I think that's all for today. Any questions that I didn't answer? Clear for everyone?
Yes, sir.
Okay, thank you very much. So let me see how many students are here right now. 24 students. Thank you for all of you that always attend the sessions. I appreciate your contribution to the class. I enjoy teaching you like always, and my pleasure. So make sure that you review the materials, solve the examples and practices by yourself, and compare the results with the solution provided. I am always available. If you got any challenge, please send me an email. I will be more than happy to answer it. Send me the link to your YouTube file and also submit your final report by Monday, December 6th on the link provided on YouTube, on a Moodle page of your course. Thank you, everyone. Have a nice day and hopefully see you sometimes in person.
Thank you so much,
Thank you,
Professor.
sir.
Thank you, Professor.
Thank you, Professor.
Thank you, Professor.
Thank you, Professor.
Thank you, Professor.